Well, gentlemen, thank you so much. We know it's been a busy day just moving around New York City. Steve, I believe this is the 1 week of the year you take the subway, right?
Yes, I'm very happy on the subway, and I'm also in better physical condition after just a few days, let alone the end of the week.
Right.
From walking.
Right, yeah, just from walking around our fair city. Well, you know, Carol started to sort of tee this up, not only from your perspective, but if I think about what's been going on, we have the House of Representatives talking impeachment. We have Boris Johnson flying back early to London to deal with his parliament there. We have an ongoing dispute that doesn't seem to be coming toward a resolution between the US and China, and it's Wednesday. So, Steve, I'm going to point to you. What are you most worried about in the world right now?
Geez, there's a lot to worry about, because, first of all, just stepping back from it, the social media and the internet are making it very difficult for almost any government to function. If you come out with a plan, you have instant mobilization of opposition to anything you're doing. It even makes it difficult for companies sometime with sort of this roving band of opposition. And financially, you have a few weaknesses in the system. I think the European banking system isn't as strong, certainly, as the US, which is in great shape. You have private investments in the technology area, which the WeWork sort of non-public offering has exposed as being really pretty inflated. When you have an industry that more or less marks up its positions in a closed circle among itself, and then it pops out into the real world. The real world says, "What are you thinking?" That's usually, sort of a wake-up call. But it's, that part of the world isn't big. That's a relatively small set. And I guess any of us on this stage, and then I'll finish because I don't want to dominate anything. When you have $13 trillion of negative interest rates, I don't even know what a negative interest rate is. And in other words, why would I take my money and give it to somebody, and for the privilege of them holding it, I have to pay them like it's a storage unit? And I'm supposed to get interest when I give people money. And as interest rates go down, most of those places that have those negative interest rates, it's not stimulative, because banks have trouble earning money, in that kind of environment. And if banks don't do well, then they don't grow their capital. They can't then extend credit, and countries don't grow unless there's credit extension. And so this whole movement, particularly in Europe, to negative interest rates, I think is some kind of warning sign, some type of wake-up call. How did we get in that position? Why are we in that position? Not us as Americans, but us as financial people looking at the world. So Brian may know more than I do, but it just seems
That's not
pretty
possible, Steve.
Well, so Brian, does this negative rate environment that we increasingly see around the globe tell you that there's some underlying weakness that maybe we're missing? We know the obvious problems that are out there, but is there something more substantial?
Well, I think Steve's point is right. There's the monetary policy decision to take rates as low as possible to accommodate the economy, accommodate growth, and they're lower in this country than they've been historically, but they're still positive, and other places are negative, and there's a significant amount of it. I think there's a debate whether it actually transmits to the economy, because if you look in some of the countries where the rate structure's been negative for 5 years, the banks still have to pay consumer depositors interest because, to Steve's point, they're not going to give us $100 and get 95 back and think it's a great thing. And so I think there's a great debate the economists will hack out. But the reality is it's showing a weakness in economies, and there needs to probably be more fiscal work done and more reform work done to stimulate those economies.
Well, good luck with that.
And good luck with that. The good news is in the U.S., you already have an economy which is pretty flexible and talented people, lots of capital, deep capital markets, a banking system that restructured, a set of rules that you can understand, one law that covers an economy that's the largest in the world as opposed to multiple laws. And so you're seeing the U.S. continue to grow, unemployment's low, and consumers continue to spend. So the question really, from the macro sense, is all that parade of interesting things to ponder and worry about, it is only Wednesday, is offset by 70% of the U.S. economy has been speeding up its activity all this year, and that is as big as China's economy. And so when was that tension just going to be really wrestled to the ground? And that's the question.
Well, and so Anand, I put that to you because you look across 100 countries. You're operating in 100 countries, I believe. Are we at a breaking point where we may see something snap here, or can we continue on, especially from a consumer perspective, in a nice upward, gentle trajectory?
Let me start on a lighter note first, because when you asked Steve this question about what's on your mind, I do have a very weighty global problem on my mind right now, and that is I have a 2-year-old grandson who lives in New York, whose father is Mexican-American and speaks to him only in Spanish. So right now, my major preoccupation is how to improve my Spanish so I can communicate with my grandchild. But if you look at it, that's a lighter note, but frankly, that to me is the real thing that worries me about the world. You look at it from a human-centered point. When you try to operate in 100 countries, language, communication, keeping the core of your business and the governance and the values of people is a major problem. So I'm looking at more as I'm not really worried about growth. I think we have enough locuses of growth to come up. You heard the Prime Minister of India this morning, and I don't think what he was talking about was hype. Steve, you've been out there very often. I think he knows what the potential is. If you look at the population, and he talked about 4Ds this morning, the democracy, the demography as well, and he talked about demand and decisiveness. If India does get moving again, and I think he's taken some steps recently, like the tax cut, which should do exactly what the tax cuts did here, you're going to get another engine of growth for the world for sure. And Brian, I see him more in India than I do here. So I think both these gentlemen understand what the potential of India is. I'm really not worried about consumer demand coming in from different parts of the world. We just have to look around the world. All the focus has been on America, rightfully, but I think you're going to see an uptick in a lot of other parts of the world.
But why does it feel, and I know we talk so much about recession, and I know you spoke with David Weston over the summer, a quote that we used a lot on Bloomberg. We have nothing to fear about a recession right now except for the fear of recession. T-shirts, bumper stickers. I mean, but I just feel like, it feels like if you talk to businesses and CEOs, they're hesitant to spend. But then you talk about the strength of the consumer. How do you reconcile those two? And are you still ruling out recession?
Yeah, nobody. If you look at all the consensus, the 38 economists, when I talked to David, I said, look, nobody has a negative sign in front of any of their estimates. And so in the bottom 5 probably average in the mid, 5.5 for GDP US next year and stuff. So even though people are saying the probability is going up because that's the uncertainty, the question is nobody's predicting it's going to happen. The fear you have is, going to your point, it's only Wednesday and what's going on. Will you get the consumer confidence to deteriorate? Right now it's come up, it's come down a little bit, and we're going to deteriorate. If that starts to happen, that's the worry. You do not see that in our activity every day. The combination of housing prices still being constructive, which that part of the wealth is constructive. The stock market still being up, that part of their wealth is constructive. Their wages growing faster now than they have really since any point in the last 8-9 years. The employment levels being high. So that's always the good news. The question is what breaks that, and that's what I worry about, the psychology of business deteriorating somewhat. Again, high, still very high, but tipped over a little bit. When does a business owner convey to their teammates that it might not be as good for you next year, i.e. higher wages, a bigger bonus, more incentive plans, whatever, or you get to keep your job? We do not see that. And our middle market loans are growing at a faster clip now than they were in the last few years. So it's all okay. And that's the question that we said. And I think the fear could cause us to back up before the data will show you're there.
So some of that fear and caution, Steve, comes from this dispute between the U.S. and China. There are few people who have done as much, dare I say, shuttle diplomacy than you have between the leaders of those two countries. You write about it in your book. Steve's book, by the way, is on sale now. I don't know if anybody's heard about it. What It Takes. But
We'll have that commercial in a moment.
Brought to you by.
But you do write extensively about China in the book, your experience there, the Schwarzman scholars, your relationship with President Xi. How does this get resolved, at least to the satisfaction that the CEOs that Brian is talking about specifically feel good enough to start spending money again?
Yeah, I'll talk about that in 1 second, but just in terms of risk, I've always felt that this cycle, when it comes to an end, won't do it from normal business cycle issues, because that seems to be managed pretty well. It'll be some type of geopolitical type of incident or
Brexit,
circumstance which hits the confidence of consumers. It won't be overproduction of goods and things like that. I could be wrong, but I've been thinking about this for a few years, and we got enough of these major things that could change people's attitudes. We're at full employment, so people have a good situation, but their behavior may change if they're scared of something. As to China, U.S., it's an interesting situation because basically driven by the fact that in the last presidential election we discovered that 40% of Americans couldn't write a $400 check in an emergency. So if you think about that, these are people who fundamentally don't have savings, and they don't earn much money. And their education, American education, has really slipped dramatically over the last 30 to 40 years. And those people are very unhappy. And they, in effect, are demanding some type of change. And part of that change happens when they don't get satisfied with domestic solutions. Historically, with populism, you get angry at some foreign entity, and China's the target. Mm-hmm. And it was pretty obvious that it was going to be, and I talked to the Chinese about that right after the election, and they were not sensitive to that. And I told them, don't worry about it. We didn't understand it either, which is why we had a president elected that nobody thought would be elected, mm-hmm. except him. And so we all learned something. I said, don't feel bad. You didn't have bad staff work, but now you know. And they said, okay, well, if that's the case, we're going to have to adjust. Now, China for 40 years has been growing faster than any major country in history. And so this is like whatever practices they have, which in history, when you're, sort of we used to call them, developing countries or underdeveloped countries. Now we call them emerging markets. And the United States did this in the 19th century. We hide behind tariff walls. You protect your industries. You don't let foreigners into certain things that, where they can compete. And that world lives until you become a more mature country, and then you integrate. Well, I think in China, part of the interesting issue is they still think they're poor, and we sort of think they're rich. And their GDP per capita is $10,000. Ours is roughly 60. But when they started this sprint 40 years ago, I think it was like $400 a person. So there's been enormous progress, but they're still, sort of like 1/6 of us. And now we're demanding our bottom 40% in effect. And also, European countries they have similar problems that we're asking China to become a more mature country and join the rest of the world. their attitude is we're still poor, so okay, if we have to make adjustments, it's not our favorite thing to do. What do we do? And so what you've been seeing over the last 2.5 years is the U.S. wanting them, as sort of the leader of the developed world, to come pretty far. And on the Chinese side, they're trying to figure out how far and how fast they want to get someplace. So the two countries got quite close in May, at which point the Chinese just withdrew. They had agreed to a variety of things, we thought, and then they looked at the whole and they said, my goodness, let's not do that. And now this is starting again. And meanwhile, what's happened in this 2.5 years is that the two countries have started, as a result of false starts and a variety of other tactical stuff, are starting to decouple, which is very dangerous.
Well, I want to dig a little bit into that, because I do wonder, I think increasingly we're expecting this world where it's China and its allies and the United States and its allies. You sit in a very interesting place, figuratively and literally, between China and the United States. How do you see it?
I see it as a situation of enormous opportunity. I have to be mercenary about that.
You mean the spat you do?
Of course, absolutely, because and I'm just being truthful here, that for a long time it wasn't kosher for anyone in American policy positions to admit that there was a kind of conflict with China, and that India, in fact, could be one of the players in this game as a buffer against China. That was just a no-no. If you went to the Council on Foreign Relations, nobody would admit that. I think now it's in the open. And I think President Trump has even made it more in the open. I mean, going to Houston and listening to our Prime Minister, I think he made it very clear what kind of alliance he had. I think there's nothing but opportunity for India in this. And we have to play our cards right and see that we are viewed now as a very, very appropriate ally for the US, as a buffer both in defense terms, frankly. If you look at the number of defense exercises between the US and India, they're proliferating dramatically. Defense procurement from India is already burgeoning. We never used to buy, we used to buy more from the Russians. And frankly, all the tenor of the relationship with India is right. This is a democratic country. It's a country that values IPR. This is a country that has scale and growth, so there is profit for global companies too over there. So I think India has nothing but a unique opportunity right now, and we have to just play those cards right. And I think it'll be a win-win for both the US and for India.
So I actually agree, and having been with a bunch of CEOs with the Prime Minister this morning, all who are talking about their business expanding in India, it's been a natural recipient, and I think some of the bureaucracy and things that were difficult to operate have been dealt with. They can be improved, and everybody knows it. I think the broader context here, though, is global trade, and if you go back and say if the China-U.S. situation will take longer, the question is what can we resolve in the interim, and this is where, unfortunately, I'm not sure what happens given the politics and the situation this week to the USMCA and things like that, which are critical to get done. Because as much as India is a beneficiary, Mexico and Canada in a trade with the U.S. is a beneficiary in a sense, or a way to operate. Let's make it simpler. The wage scale in Mexico is actually lower than parts of China. They could use the jobs. There's a lot of people could move the manufacturing there. There's already integrated manufacturing supply chains. Canada's a different situation. So I think to keep the U.S. kind of moving forward, there are 3 or 4 things to knock out. Everybody hopes for China, U.S., but there are a couple things to knock out first, and one of them is a USMCA. I just don't know politically if they can push it through, even though I think both sides seem to want it. And if they could push that through, that would be good, and give more time to work, I think, on China.
So, Brian, I want to stick with something that you said in the context of the meeting that you had with Prime Minister Modi, which is clearly CEOs are stepping into a brighter and maybe higher expectation type spotlight. We hear it over and over again. Do you feel a greater responsibility now, especially given what's going on in Washington, in London, and capitals around the world, to speak out, both on your own issues related to business, but also social issues.
In the end of the day, especially our company's been around for 230 plus years. And so we've been around through all kinds of fun stuff if you think about it. But the reality is our job is to produce profits and make progress on what society needs to do. And so the idea of the purpose statement by the BRT, the work I do, that we all do with the International Business Council and the World Economic Forum leadership for years, Mike's leadership on the climate, you pick your thing. The idea is we have to have companies that can do both, produce a great profit and make sustainable, make progress on the SDGs. And so I think all the CEOs agree with that. And so the attribute where people say we're speaking out publicly on an issue generally comes from the need on that second, but it also reverberates the first. If you have teammates working for you, and you went what we went through over the last 5 or 6 years on post-nightclub, Charleston, Vegas, Houston, Parkland, and you had teammates in every one of those situations, that led our team to say, we ought to take a stand on something. It was not because we needed to go out and make some policy statement. It was because if you think about to have great teammates, to make that profit you have to protect them. On HB2, which was a North Carolina issue we had to come out because it was our headquarters town and our people would not travel there. And so, well, people are thinking this is about me or something. It's not. It's about we have to represent the 200,000 teammates, the 500,000 or 600,000 people and their families, and insure them well and pay them well. But also, we need them to be successful and to produce great profit and sustain progress on the SDGs. And that and is the key. And so, as long as we can do and, the investors and stuff should stay with us, and then it gives us the permission and the availability, but it comes from really the view that our customers, our teammates, our communities, and our shareholders really are more aligned, and it's nothing new. We came out of the community, we were formed by people saying we need financing, to Steve's point, in this community 230 years ago. So start to think about it. We've been through all the impeachment proceedings. We've been through tough elections. That one in 1800 was a mess, and they made a nice play called Hamilton out of it, right? We have been there through this, and we will be there through the next one if we basically do both, make great returns for our shareholders and deliver on the society needs. Because at the end of the day, that means communities grow, that means we grow. So in India, we handle the same thing. We built a children's museum in Mumbai why? Because they never had a children's museum in Mumbai. You'd say, how's that consistent? Well, that's what our teammates wanted us to do to help out. So it's work on both sides.
Steve, I want to bring you back in because I'm curious, as you know, on the campaign trail, some of the candidates have kind of put private equity on their radar and saying
we've been happy with that as back.
just watch, the baton sometimes comes back.
It always comes back.
But I am curious that saying, private equity is responsible for some of the inequalities that are in our world. What do you say to that?
Well, I'd say there's a lot of misunderstandings. The private equity industry is comprised of a lot of different firms. But basically what we do is, leaving other asset classes like real estate aside, we buy companies and we try and make them grow faster because when you exit, you get a higher multiple for higher growth. And to do that, you have to invest in these businesses. They just don't grow faster because it's in your interest. So you put more capital in them, and you come up with good strategies, and you drive growth. So when you grow businesses, you typically need more people. So this is sort of a virtuous circle. From a financial risk perspective, we went through the global financial crisis, and private equity firms didn't have financial difficulties more than other kind of companies. So on the downside, the industry hasn't really created much difficulties. On the upside, you earn typically for your investors who are pension funds, they're regular people. They're the firemen, the government employees, the corporate employees. You make double the stock market indexes. So basically, this is a really good model. In the 1980s, it wasn't so much like that. In the 1980s, there were only a few firms, and prices were so low in the 80s that you could buy something and just cut costs, lay off some people, and you were successful. That world is just gone. with the kind of higher prices that you have to pay to buy anything today, you just can't be successful doing that. You must grow your way out of the creation price. And so I think there's some leftover perceptions. There are also an occasional high profile type of situation, whether it's in the retail business.
Years.
But you must look at retail generally, and Brian would know more than I do. But retail has been, with the disintermediation of the internet, the number of retail companies that have gone busted are huge. The same way you could get a private equity company that owns a newspaper. That was in this political treatise that one of the candidates came up with. What's happened to newspapers? I mean, the vast majority of them have gotten into trouble. So you can take one example and make something out of it. But just to give you context, right? There were roughly 151 million jobs in the United States. 66 million people changed jobs in a given year, right? US economy is unbelievably dynamic. The number of people who were fired in the United States was 21 million. The number of total jobs in the private equity owned companies is 11 million. So when you look at the massive amount of companies, where do you get those 21 million people who lost their jobs? It's not from private equity, it's a very small part of the whole economy. So this argument is wrong, and it sort of pyramids mistake on mistake, and I think there's an ideology that goes with it, and also terrible marketing on the part of the private equity firms. You have to give them a D for not being able to explain this.
Right.
This is pretty simple
No, but get
stuff.
your message or
Right.
explain what you're doing.
So because of where we are and all the discussions that we've had at this summit about climate and sustainability, I think it's fair to say that when we look back on this week, even this very newsy week, the star, and apologies to all of you, is going to be a 16-year-old. Greta Thunberg, her statement about what the world is doing or not doing related to climate change. I'm just going to quote what she said to the heads of state. People are suffering, people are dying, entire ecosystems are collapsing. We're at the beginning of a mass extinction, and all you can talk about is money and fairy tales of endless economic growth. How dare you? That's memorable. Is she right? Are we not doing enough as governments and as companies to really face this? And are corporate leaders, at least, Anand, listening?
I think they were. I was very pleasantly surprised to see the number of people who showed up at the climate events. The CEOs who signed up wearing that large, ungainly badge about the 1.5 degree ambition. That's not a pretty badge. So to wear that itself was
It's not a fashion statement.
Not a fashion statement. But people are committed, and you know, I've had one statement I make about sustainability, and I've been repeating it with monotonous regularity. I don't really intend to get into the debate of whether climate change is real, who's the guilty party, who's not done it, has the West polluted, should the West be paying and India only benefiting, should we be getting money? I stay out of that. My statement is, it's very simple. This is the biggest profit opportunity for business people of the next few decades. Why are even we wasting time arguing about who's right, who's wrong, whether it's a 16-year-old or it's the president of the US? You know, frankly, somebody asked me the other day in a podcast, they said, do you have a message for governments and do you have a message for other companies? I said, yes, I do, a little tongue in cheek. And I said to governments, I would say, please, don't fight climate change. Don't invest in innovative technology. Let India do it. Let us get ahead of the game. And then you come in after we've put ourselves right on the top. And to my fellow company people in business, I would say, climate change isn't real. Just stay out of the game. Keep arguing with the 16-year-old girl. We are making money at everything we've done in renewables. Let Mahindra Group go out there, clean up the opportunities, you come in later. Because to me, the point I was making was this is futile. And we are just creating almost a media-created sensation of villain, victim, And frankly, the winners are everybody, because everything our group has done in sustainability has actually made money, and the businesses we've started in the last 5 years are amongst the fastest growing. Waste to energy, solar. Why are we even wasting time on arguments?
We agree. I'd agree. The debate and the arguments of what's going on scientifically and stuff are just don't help. And I agree that with Anand, that, the reality is we have to make progress, and we have to make a lot of progress. It costs about $2 trillion a year is the estimate for the environmental part of the SDGs. $6 trillion overall. All the charity in the world is $800 billion a year. The U.S. government budget's only $4 trillion a year. So there's no government's going to solve this, and no charity is going to solve it. Who's going to solve it is capitalism and driving the change. So since 2007 to 2019, we did $125 billion of stuff around the environment. In the next 10 years, we'll do another $300 billion. That is, green bonds. That is, we're carbon neutral in 20, not 5 years from now. We're carbon neutral next year. It is solar installations across the country of India. It's solar installations across the largest warehouses of the United States. It's wind farm financing. There's a tremendous business opportunity, but it's time for capitalism to come to drive it, because that's where the money will be. And so it's how we operate as a company, and all of us have companies we operate and driving them to carbon neutrality and making that commitment. It's how we then finance the build out. And it's the last part is the key thing, and Anand mentioned this. We can't be, in the Western developed countries, we cannot be of a sort that we will not allow other countries to have the energy that they need to have to develop. We have to produce the right energy for them. That it was sustainable energy for all from the last UN Secretary General, where they figured out a plan and how much it cost. That is the critical thing, is we can't be arrogant in the West or developed countries and say, hey, you can't have the power. We have to sit there and say, we will get you the power the right way. And that is where we really got to watch what's going on with coal and other things in some of these economies. We have to provide the replacement, even if it costs us all money. But I think the business opportunity actually takes care of it. That goes back to the point, you can produce a profit and you can make the goals. And if you look at what we're doing, and this has become a large business for us.
So you asked about, is Greta right? Again, about saying you're just focusing on money. I would just say, Greta, let it be about money. Don't make it about either or.
Right.
You got to ditch that dichotomy. So the only argument I have with her,
it's about
it's
both.
both.
Yeah.
It's because she's making it sound like give up your ways of making money and worry about the environment. I'm saying the real power is not that. So she is wrong. I'm saying we're businessmen. You're showing us the money. There is money there, and the pursuit of profit and capitalism is in fact one of the answers to this solution. So I would argue with her if I met her that don't make it so black and white.
But I think there's concerns that the goals that a lot of folks are laying out are more ambitious than the actual initiatives. And I think that's some of the concerns. But from what you folks are saying, I'm listening to you talk, and I know, Steve, you guys have ESG investments over at Blackstone, so I know.
It's just the compounding effect of everybody doing more and more and more. And is it going to be enough? There will be great debate every year on the 40 years about that. The question is, if we do more next year than this year, and you get more people doing more, and you get the investors, not only Steve, but also the mainstream investors, to say, if you're not doing something on this, we're going to start to take our money, not the oil companies, but all of us.
Right.
And then you'll see the compounding effect of that. And it is powerful. I mean, just think of...
It's called an ambition loop, which is already in. We set an ambition 3 years ago about reducing our carbon footprint by 25% in 3 years. We did it in 1 year. So we made another rollover. It just keeps multiplying.
Yeah, sorry, Steve.
No, I think they've answered the questions. I mean, the sale has been made on sustainability.
It's a favorite saying of mine.
And
You made the sale.
I mean, really, there's not much debate.
Right. But are we doing it fast enough? Because I think one of the things that was brought up on one of the panels is we're kind of running out of time. You can't reverse what's done.
Right.
And so do we need to be more ambitious with our goals
Let's
actually put the policies in place?
I read a book recently that said you should always go big.
Yeah.
Excuse me?
I read a book recently that said you should always go big, Steve.
Yes, well,
That's one of the big takeaways.
the hardest thing to do is change what people think and form a consensus. I think on sustainability, that's happened. And virtually every business I know has concerns in that area. And as Anand was saying, it's very profitable to address those issues. I mean, we found, once we started looking at that area, you know, we owned a large retailer, and you know, we hired a team to start putting in sustainability stuff. And I know this sounds almost like primitive, but on the roof of every one of these retailing units is some air conditioner condenser or something. And, you know, it's what keeps the store, you know, cooled. And we just sent somebody up to look at every one of them. And what you found is that a little rubber, you know, sort of thing that makes some of these circular things do something was like tired. It wasn't taut.
Yeah.
And as a result of that, the electric costs were way higher. And by buying something as simple as like a $2-3, you know, sort of little part, we could cut electric bills by 15-20%. Right. And, you know, who could be against this?
Right.
The practices at the beginning were the problem, but what's happened is there's the sensitivity on these issues has driven the business community to do all kinds of things that are basically, some of them are not even so hard,
right,
and they're really important.
It's a mindset.
So we only have a couple minutes, so we're going to ask you to be kind of quick, but we'd like to end on an optimistic note because we do feel like we're all challenged every day with some of the headlines that are coming out. So give us something, Brian, to be hopeful about.
I'd be hopeful about the human capital in the world, for lack of a better term, the ingenuity and ability to solve problems. And so if you look at 1969 in America to today, we went through Vietnam, we went through an impeachment resignation of president, we went through the civil rights issues, we went to the DNC with riots in the street in 68, 69, Bobby Kennedy, Martin Luther King. Twice as many people working in the US, 6 million more working less in manufacturing, 80 million more people working. And the unemployment new claims today that are filed on a Thursday are the same nominally as they were back then. And the population has gone from 250 million people to 300 and some million people, and 80 million people more work, all because of the ingenuity in the U.S. That's a very optimistic. We'll figure a way through this. And if we can figure a way through this, India can figure a way through this, Europe can figure a way through this. It's just going to take some time, but you have to be optimistic that all this talent, these 7 billion, 8 billion people in the world, are going to figure out solutions. We just have to get them working.
I feel
Anand?
optimistic. That's good. Anand.
I'm going to keep it very simple. Even though I gave an argument against Greta earlier, I find her one of the biggest causes for optimism. I grew up in a generation at the time of Woodstock. And you know, people from my generation missed the fact that young people didn't seem to have the kind of search for identity that we went through. They weren't questioning things. There weren't those coffee room conversations, questioning the world, existentialism, Sartre, Camus. Where's all that gone? It was all Instagram now. And the protests in New York gave me hope because it felt like the old days. It felt like people, young people, were beginning to question again. And you know in America more than anywhere else that that generation is what brought about real change. That brought an end to the war. So I'm optimistic because if these young people are going to become anything like what that generation was, you're going to see real change and very positive change.
Last word to you, Steve.
Well, I was at a meeting before lunch where I guess we all were with the Prime Minister of India, talking about the development of India. And he's a very special kind of head of a country. But what gave me enormous optimism is they went around part of the room and each CEO was talking about what they were doing in India. And each of these individuals were really amazing. What they were doing, what they were innovating, what they were creating, the way they presented themselves, the way they were conceptualizing how to expand. It just happened to be one country. That I sort of looked at this group of people and I said, this is a resource that's really unique. The drive, the commitment, the creativity of every one of the speakers. And I said, you know, we've got a winning hand long term. Because there are people in back of each of those people who are equally gifted. And I think that's a part of America we take for granted, or we don't see it. But anybody who sat in that room, watching, listening, had to be dazzled by the people who were in charge of substantial organizations trying to do really interesting things. And those people will do that in other areas as well. Right. And that's what I think is, it's a really,
Right.
really understood area of uniqueness in America.
And a reminder of everything going on behind kind of the crazy headlines.
Right. All right. Well, gentlemen, thank you so much. Thank you to our audience, Steve Schwarzman, Anand Mahindra, Brian Moynihan, and Carol Massar, and Jason Keller.
Keller.
Thank you so much.
Thank you, everybody.